QuickBooks Pro Desktop 2021 Bank Reconciliation Month Number 1 Deposits. Let's get into it with Intuit's QuickBooks Desktop 2021. Here we are in our Get Great Guitars homepage. We have the open windows open. You can open the open windows by going to the View dropdown, selecting the Open Windows list. We're going to start our bank reconciliation process. To do that, let's first open up our financial statements, our balance sheet. We're going to go to the Reports dropdown, Company and Financials. We're going to go on down to the Balance Sheet Standard. We're going to change the dates up top. We're going to use the range to do so. We're looking for the month of January. We will be reconciling as of the first month, first time we've ever reconciled, and that will be the month of January, at least in the QuickBooks system for our new data set. So we're 01/01/21 to 01/31/21. So January 1st to January 31st. We're concentrating, of course, on the checking account. So we have the checking account here that we're focusing in on. And then we're going to be taking a look at our bank statement. Here is our mock bank statement. So we're imagining this being the document we got from the bank summarizing our account within it. So this is not internal. It's from the third party. It's from the bank. So the bank statement will typically be a summary. We'll have a summary and then breaking out the detail. The summary having the beginning balance, the additions, the subtractions, and then the ending balance, where we stand in terms of the bank balance as of this point in time. Of course, that ending date being the same date we will be reconciling on our books, that being January 31st. Then we'll have the detail of the deposits broken out and the detail of any deductions or withdrawals or decreases to the checking account broken out in detail as well. So our goal is to match this up to the data that's in our system. So if I go back to our system, note you can look at this like this way. You could double click on the transaction and you could start to drill down and say, okay, here's the transactions I have. Here's check number 1001, which is 12,000 and so on. And you can see that there's the 16 and whatnot. So these should obviously match up because this is our cash account that's going to be flowing through the same information on the checking account. We entered it in on our side and the bank is entering it in on their side when the data becomes relevant. So now we're going to reconcile the two. They will not match because of those outstanding balances. To do that, I'm going to go to the banking dropdown. We're going to go to the reconcile, banking and reconcile. So we want to be reconciling the checking account, of course. That's our only cash account, so we're going to use that. It's going to be as of 01/31/21. So we're going to reconcile 2 months right after each other. We entered 2 months of data, and now we're going to reconcile 2 months. That's not that unusual. I mean, that could quite well be the case when you're entering data into the system. We want to do it that way this time because we want to be comparing side by side the differences between the first bank reconciliation and basically all others that will be represented by the second bank reconciliation. We then have the beginning balance, and note here's a problem for us. I'm going to say because this is the first bank reconciliation, and notice I adjust the bank statement a little bit to show this problem that could happen. It doesn't tie out. The beginning balance doesn't tie out. That's a problem. And we're going to say, okay, well, why did I enter this 25,000 in there as 25,000 when the last bank statement says it was as of January 1st, 30,000? Why didn't I enter it into the system as 30,000? Well, I couldn't do that because I took it. In this case, we had a business that was starting in a prior accounting system, we're imagining, right? And we put in all the beginning balances into the system at this point, and we had 25,000 in as cash. If I used anything other than 25,000, I wouldn't be in balance because that's what the trial balance said was in cash. But the bank statement says that wasn't the case. So what's the difference? The difference are outstanding items. Well, how do I account for that now in my first bank reconciliation? What am I going to do about that? Well, we'll see that as we go. It'll kind of reveal itself as we check these things off, and then we'll think about what to do with it. So remember, that will be a problem. We're going to think about that kind of like the first deposit, something that we need to check off for kind of like the first deposit. Then the ending balance is going to be this 89,335 that's being taken from our balance here, 89,335 for the ending balance there. And then we have the service charges and interest earned. I don't like to use these typically, but some people do like to use them. These will help you to post normal kind of things to the bank reconciliation kind of automatically, meaning you might have service charges such as this. The bank might charge you service charges like this $15, and they just take it out of your account. You didn't know about it, so you couldn't have recorded it on your side because you didn't know about it until you got the bank statement. So you could add that as you go, but I like to not do that because I like it kind of confuses things. I want to see it in the bank reconciliation and check it off, and I'll show you what I mean when we go through and do that. The same could be for interest earned. We might have some interest that we earned, and then we didn't know about it, so we didn't record it in our side of the books because we didn't know about the interest we earned until we reconciled and saw the bank statement and saw that we had that interest earnings. Again, I don't like to do it in this format. I like to actually input it manually so that I can make sure I know what's in there. I entered it and on the check register, and then I can check it off as we go. So let's continue. So we have the basic layout here. So we have our period on 1/31. Now here's all of our data. Notice it extends beyond the 31st. Now if we did our data entry properly, we shouldn't need anything entered after January 31st. January 31st, we shouldn't need any data after that, because it's possible that we entered something, say, on the 31st here of January, and it didn't clear the bank until February. But it's not possible that something is on the bank and it didn't get on our books until after the cutoff date, meaning it couldn't have hit the banks before we recorded it. We might have things on the bank statement, such as these two items, that will not be in our books, and we will have to add them. But it won't be the case where the bank put something on the books and we recorded it, but we recorded it in the wrong month, unless we made an error, and we'd have to look into that. So that means that we can basically remove anything that's after January 31st, and we should be okay. And you would do that by hitting this hide button. So that's going to hide anything after the period date here, so that it'll be a little bit easier for us to check everything off. Now these buttons down below will allow us to mark everything off. So if I knew everything was accounted on the bank statement, I could just mark everything and do it that way. Some people like to mark everything and try to maybe unmark the ones that aren't there. I don't think that works very well because it's kind of difficult to do it that way. So you can't really do it. Now, if you're doing if you're taking this information like with bank feeds directly from the bank and you're reliant entirely on the bank and you're not reconciling, there's not going to be any reconciling items because you're taking your data directly from the bank, then this thing works great. You could just mark them all off and it should tie off exactly and you'd be good. But otherwise, not so lucky to do that. So we're going to have to undo that. We can unmark all here. And then these items down below, this shows us our beginning balance. This shows us our deposits and our withdrawals as we accumulate upwards. And then over here, we're talking about our balance at this point in time. And so this is the balance. This is the cleared balance, which is only the beginning balance at this time. This is the balance that's on the bank statement, the 89,335, which is here, the ending balance. And this is the difference between the two. So we're starting at 25,000, which is basically the beginning deposit here, except it's really 30,000. Those two normally match. They don't because of our beginning bank statement problem. And then we're going to be checking everything off. And if we check everything off properly, we should get this amount to zero. These two should match. And what we'll be left with are those things that we didn't check off over here. And the things that we didn't check off over here are going to be the outstanding items, the difference between the bank balance, which will now be the 89,335, and our balance, which will include the things that were not checked off. And that's how the system will create a report from it, reconciling the bank balance and our balance. So let's start to compare this. We're going to just do the deposits this time. The deposits are usually a little bit easier to do, and that's for a couple different reasons. If we look at the deposit side of things, normally we enter these directly, no matter how we enter the deposit, right? If we go to the bank and enter the deposit, or if we do an electronic deposit of some kind, then we are going directly to the bank, and it should be something that doesn't take too long to clear. So although we don't have a reference like a check number or something like that, the date is usually pretty close in range, so we can basically see it pretty clearly. Now, the problems with the deposits, just realize that the problems with the deposits usually lie in us having our grouping of deposits in a way that is different than is on the bank statement. And so as we went through the data input, you'll note that we emphasized that use of the undeposited funds. And that's going to be the tool that you're going to use to try to match up the deposits that are going to be in the bank statement that will be the same as your books. Problems that arise in that area will typically have to do with credit card deposits when you're getting credit card payments. How are you going to group them in your system? How does the credit card company group them? You got to match that up somehow. If you have cash payments that you go to the bank with at the end of the day, then you got to make sure that you use that undeposited funds, grouping the cash deposits as cash deposits rather than just basically every time you get a receipt of cash, you put it into the checking account. Otherwise, you're going to have to add up all the receipts of cash and tie it out, and it's going to be a burdensome process on the bank reconciliation side of things. But if you've grouped everything properly, then it should be really easy to tie these things out for the most part. So we're always going to go from the bank statement to our books. So because everything that's on the bank statement should be found on our books. If there's something on the bank statement that's not on our books, it could be possible the bank made an error, but that's not likely. It's more likely that it's correct and we need to fix our books. So if it's not on the bank statement, if it's on the bank statement, it's not on our books, we probably need to fix our books. If it's on our books and not on the bank statement, then we actually expect that to happen because we expect to have those outstanding balances, outstanding amounts, the timing difference amounts to be there on our books, but not on the bank statement. So there shouldn't be too many of them with the deposits because, again, the timing is pretty close together. But on the check side of things, you could have a fairly long timing distance. So 50,000, let's just check this off, 50,000. There's the 50,000 there. So I'm going to say, all right, there it is. Back on over, right click. I'm going to go ahead and select this and I'm going to make them green once we found them. And this is what I would actually do in practice. If you can highlight print the thing out and use your old highlighter and highlight the thing off. It's kind of a tedious task, but it's not too difficult a task. And then we have the 65,000. And so we're going to go to the 65,000 here. So say 65,000. There we have that. And I'm going to make that green. So there is that. And then we got the 5,600. So the 5,600 is going to be the 20,500. So if we go back on over, we have the 20,500. And that's going to be here. So we've checked those off. If I go back over, I'm going to right click on this and make that green. Now note the dates are not going to be perfect because we would expect the dates on the bank statement to be a little bit after for the deposits what would be in our books. So if we go back to our books, for example, for this last one, it was deposited on our books. We went to the bank, we're imagining, on the 18th, and it didn't clear the bank until the 20th. That would seem kind of relevant. You would see a lot more consistency in that difference, that timing difference on the deposit side of things than you will on the checks side of things. So these are usually pretty close. On the check side of things, you could give somebody a check and they could just hold on to it for like a long time and not deposit it for some time. And so you could have a much larger distinction on the check side of things as you make that as you make that entry or reconcile between the bank statement and your books. Now on the deposits also, you don't have a lot of other stuff to go on usually. If you make a deposit into basically the bank with cash, then it's just going to be a deposit, right? That's all you're going to be seeing. However, if you have electronic deposits, if you're getting your deposits paid to you electronically, then you might have more detail on the deposit side of things, and that could help you to basically tie everything out as well. On the check side of things, sometimes we have the check number, which makes it a little bit easier. But again, even over there, a lot of times it's electronic type of payments, but the added data with the electronic payments, such as possibly vendor information, could be useful on that side of things as well. Now, as we go back on over here, we now see that we have this one deposit that has not been checked off. Why not? Because we entered it kind of late. Now, this is on the 23rd, so you would think that it would have cleared by now, so I'm a little bit worried about that. But notice we might assume here, of course, that it hasn't cleared in January and then it will clear in February. That's going to be our assumption. Now, the fact that the date's on the 23rd, that seems like kind of a long stretch if it is a deposit. If we're worried about that, how could we check in on that to see that it is indeed simply a timing difference? We can call the bank or we can go onto our online banking system and see if it did indeed clear after the cutoff date. If it cleared in February, then no big deal. It's just a timing difference. We might want to look into why it took so long. But if it cleared in February, the money is there, and it will simply be a timing difference for our bank reconciliation process, and that's exactly what we would expect to be happening. Now, the other thing we don't have at this point, because I would kind of think of this beginning balance as basically a deposit. Notice I'm suspecting here that this $30,000 is going to match out against checks that were outstanding in the prior accounting system that we didn't enter into our system because they were checks that were entered in the prior accounting system that were entered, before the cutoff, January 2021. And I'm assuming those are these two checks. So that $30,000 minus these two checks would be the beginning balance of $25,000. So I'm going to basically move forward and see if I can verify that by checking off everything else that has cleared in January. And if I don't see these two items in our books, then notice that's probably the difference. That's probably the beginning balance. It's the $30,000 minus those two checks that are accounting for it. And then I'll think about, okay, well, how can I deal with that in this first bank reconciliation process? So we'll stop here for now. We're going to go to the check side of things next time. So you can go down here and say leave. You can say leave, and it'll basically save your work there, and then we'll continue on with it. So you can go to lunch in the middle of your bank rec and not lose the whole thing until you reconcile, and then start working on it again as we go forward, which we'll continue to do next time.